Hey, what's going on, guys? This is Terrence Ray. I'm back at you with a weekly stock market update. This week, we're going to go over the expected move in the SPX. Haven't done that in a while, but with the VIX, with the spike in volatility, I think it's important to go over that this week. And I'll go over, you know, um, go over the dynamics of the call spread that I am down money in Tesla. But we still got hope. I guess we got hope. But anyway, let's get right to it. When we're looking at the SPX, while I was getting ready to come on for the video, just running through some stocks. Let's pull up the SPX, go to the daily. Now, I had this right here, this little wedge right here of C form, and I've been had this on for, for a few weeks now. And you can see the market just been boringly going, drifting higher, drifting higher, drifting higher. And finally, you can see right here at the edge where it came to a point. We had a Harami candlestick pattern right here. So you see this candlestick right here inside of this big red one. And then we got the gap down on Friday. Now the expected move for the week is $114.51. Now, that's pretty that's a nice size expected move. Like last week, I think it was I can't remember, maybe like 60 something or 70 something, but it was significantly lower and we got that large move. We got that breakout of this wedge. And I really don't care why. Some people talk about this. It doesn't matter to me why. I had the pattern here, and I knew once we got to a point, either we was gonna do shoot higher or shoot lower. And with that being said, I got that. Basically, I drew this on the option chain right here. This little ruler. I just put this on the chart so that we can see right here the green and then the red. Now, when I put my indicators on, you'll see that red over here, and you'll see the green right there. Matter of fact, it's the wrong setup. Blah, blah. My active trader setup, and you'll see this is the 50-day simple moving average I got right there. And that is right where the expected move for the week to the downside would be. I do think we have a good possibility of getting down there for the week, maybe. Even because this is just basically one red candlestick lower. I mean, you could count this one, but this is the first one after the gap. I could very well see us. Let's hide these indicators again, make the screen clear. We got a gap down here right around, we'll call it 6,050. And then I'm going to go ahead and put a rectangle right there. I expect to see some support right here. Now, I'm not saying it's going to make it there this week, maybe next week, but I do expect to, if not before then, but I definitely expect to see a little bounce right here. And that could just be a little pop higher, but we were due for a little down move. That's a market. Market just can't do this all the time. I guess it can, but it doesn't. So at some point, you're gonna get a little bit of a down move. So this week, other than I already have a long call spread in Tesla, right? I don't really have any buys for this week, to be honest with you. We could see some furious bouncing going on. I mean, like some two-sided action. Like you can see, I could see the market coming down and then maybe you get a quick buy up, right? And then then it go back down some more. In these type of markets, because if you're looking at the SPX after we've had this drift higher and now you're starting to see this, I wouldn't be trying to step in, and you got to be careful scalping. Basically, if you're a scalper, you got to be careful, get in and out. I expect volatility this week. The market expects volatility with the VIX being elevated and the expected move being higher this week. Like if we were to let's pull up the VIX. Look at that. It's the opposite of what we had on the SPX. You see right here. So you still have a Harami basically, but you got a gap up and a big green candlestick like it's getting ready to break higher. So if vol is gonna go higher, which looking at this chart, I would think that hey, we might get another green candlestick to take this high out right here to go higher. If that's the case, then we can pretty much safely bet that the overall market may go down. You may have certain stocks that are, that may pop and still go higher. I still have some stocks over here that look pretty good, like WEC. I have my Fibonacci levels on here and it's hitting them all. Hit the 618, 100, the 1618, and then even went higher and pushed higher on Friday. So as the overall market was going down, WEC Energy Group was going higher, making higher highs. And not only making higher highs, but that is let's go look at a 5-year weekly. That's an all-time high, guys. Let's go out. We can go out we can go out years. Let's do a monthly chart. Look at that. So this is a 20-year monthly chart. This is as much as far as I can go. Look at that candlestick right there on the monthly. So it just looked like it's just getting ready to break out. And this is some real consolidation up here. This stock can run. So with all the with everything else that's going on, remember, one of my motto is there's always something to buy, and you can sell some stuff too. Now, this may be a great week to sell some premium. I'm gonna talk about my Tesla spread first, and then we'll get into some premium selling strategies that possibly we could put on this week, or that I may put on. With my Tesla call spread, my thesis is still the same. I still think we're gonna get a break out of this triangle, right? You got your pole right here, and then you got your flag. This is just a huge flag because this is a daily, and you just got it ping ponging in between here, right? It's similar to what we were looking at over here in the SPX. Basically, it's just stretched out, but still ping ponging in between. Now, this came up to went higher to like a point or apex and then broke down. We go back to Tesla. This one isn't angling up, it's going sideways. Now, it can break lower, right? As we see, we got 1, 2, 3, 4 candlesticks down. Now, we do have a gap right here when it broke higher. So let's draw that in. And let's see, we're going to draw this support level in right here. This is where the gap is, where it gapped higher and started this move. Now, it wicked here on Friday. Let's see if it can hold. Now, my call spread that I have on my short strike is up here. So let's go look. My short strike, which is the one that I sold, is at 350. And the one that I bought at 345, I paid 175 for it. Now, it's still worth 92 cents right now currently with the market being closed. It could be higher. So it's down roughly, what's that, $83 right now. Now, the reason why my short strike is where I think it can get to. I want to see it get there. Now, when we analyze this, the longer it takes, now I got 47 days. And the most I can lose on this spread because I bought it is 175. So if what's the worst case scenario, I can hold this for 47 days and take that 175 loss. The most I can make is 325. And in order for me to do that, I kind of need time to go by. Also in it to get up here to my short strike. So I'm not in any, like, when I put the trade on, like, I'm okay with losing the whole thing. So I got time. You know, I still believe that no matter what we get down in here, that we're gonna get this move higher and it's gonna break out of this triangle. And I'm willing to keep this trade on. And I'm also watching to see if I get any type of reversal pattern. Now, I'm gonna show you what I'm looking at. Show you guys a little trick. Excuse me. With my full stochastic down here, This is one of the things I look at. I want to see it get down. Right now it's at 27. Once I see this green line begin to turn up, begin to turn up and then cross over the purple line. Once I see that, I'll start looking to try to get, maybe I'll scalp something like this where it crossed here. See where it gapped? If I get a cross and then a nice green candlestick, then that's something I may play to the upside and buy like a call in, maybe like a day trade or something like that. Or it just depends. I drop down to a lower level. And so I'll be watching that to see. So right now, my all eyes on Tesla for me. Whenever you get these consolidations like this, just like here, the longer the consolidation, the more violent the move most of the time. So like you had the consolidation back here in April. Look at that. Just went sideways. And then when it darted higher, look at that. Just gapped here, gapped here, gapped here, consolidated, gapped again. So you basically went from like what, two 283 or 284, 285 or so we call it 285, and you went to what, we'll call it 367. So you went from 285 to 367 in like what, 12 days, 12 to 14 days. So basically 2 weeks, Tesla gained about $80. So it's more than, and that's right just at the end of the expected move. This is the expected move right here. So it's just right here at the end of it. So we can most certainly see it break out to the upside. So I'm just gonna sit with this call spread right now. Once again, I am long the 345 and short the 350. Uh, and we're gonna sit there and see what happens this week. Now, if the VIX is going to continue to run higher, that means options are going to become more expensive. That means that this is premium selling time. The only trick, the only thing about this, which has me a little perplexed, right, is the IV rank on these options are still below 30. So, meaning that if we're going to have a real sell off, that's why I'm almost not buying this sell off fully. If we're going to have a real sell off, right, then the IV ranks on the MAG7, these stocks should be higher. The IV rank should be higher than this. The highest one is like Apple at 23.6. Oh, I'm sorry, Caterpillar only has a 23.9. Nvidia got like a 20.7. So the IV rank isn't high on these stocks at all. So it's saying basically I don't like to sell premium on equities unless the IV rank is 30 or higher. So we don't even have a 30 or higher IV rank to sell the options. So it's almost like the market isn't the volatility isn't pumped in the options, especially on the MAG7 that I have over here and Boeing and Caterpillar. It's not in there. The vol hasn't been pumped in. So the market isn't buying the sell off, basically. That's basically what it's saying. You know, um, we'll see. Now, something could change. Let's see if when this market open on Monday morning and then we get another big gap down and another big down day. Let's see if the IV rank goes higher in Amazon, Apple, Meta, Google, Microsoft, Nvidia. Let's see if Netflix. Let's see if the IV rank expands in those. And if we can get the IV rank to go up in those, then we know we got a real sell off. So hey guys, hopefully you got something out of this video. Just trying to help you guys get ready for the week ahead. Um, be on the lookout for all the members. I will be putting something on maybe later on in the week. I'll go in and then maybe put something up in the community tab. So make sure you guys stay in tune to that. Really think I'm just gonna keep the channel free. That way it's no pressure on me. I like to just come on here and show stocks, show stuff that I'm trading, and talk about, anything markets that I like to talk about without feeling any pressure to deliver any type of, anything at all. So, I'll continue to show trades that I'm doing and stuff like that, and I keep the channel free. That's the way I like it. With that being said, guys, I am out. Peace.